Good morning from Chicago traders. It is 8:01 a.m. Chicago time on Friday, the 26th of February, 2021. Thanks for joining me today on episode number 1945. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just a quick mic check. Just let me know if I'm too loud, too low, something. Just let me know how that's coming through to you. In the meantime, I'm going to dive right into the Convergent Trading pre-market summary sheet. We have a slight risk-off sentiment after yesterday's selling. We did get some important figures this morning. The big news is that the big news is coming is that the U.S. House, which is controlled by Democrats, is about to pass the $1.9 trillion stimulus bill, and so the market's been looking for that for a while. It's taking a while to get that through. Rising bond yields raise concerns of higher inflation. This is what the market is responding to yesterday, and that's really we'll cover the overall movement yesterday. Look out for Chicago PMI today. Remember, that comes out to members at 9:42 a.m. It could be a market mover if it's a big miss. And then we have Michigan sentiment at 10. This morning we got personal income came in at 10% versus a forecast of 8.5, and personal spending came in at 2.4% versus 1.9. And so that's where that stands. Okay. Let's move on to what we see here in terms of the S&P. The S&P has already traded 575,000 contracts. That's approximately 2.5 times what we would normally expect at this point of the day. The overnight inventory is about 36% long. We are slightly above the close yesterday. A lot of the volume is above the close yesterday, 46 points of range. The market is bouncing and has been going sideways for most of the overnight session. So as you can see here, the European markets have sold off. The NASDAQ is relatively strong this morning. Looking at my quote board, silver is taking a bit of a hit, down 76 cents, trading at 26.92.5 currently. That's 2.75% down. Crude oil still above $60, is at $62.53, down $1. Representing 1.57%. The Euro Stoxx 50, as I said, are down 1%. Gold is down 0.81. Gold's trading at 1760, remaining below that 1800 figure. And then the Dow is down 11 points. But the S&P, the Russell, and the NASDAQ are all up. The NASDAQ leading the pack today, plus 136.25 points, or 1.06%. So basically a mishmash, as we see here, a mishmash of allocations this morning, really shaping up to be a pretty choppy morning, which is what I expected yesterday, but was completely wrong. So let's take a look at what was expected yesterday versus what we got in our review segment. Here's the expectation of yesterday. Looks awful now, doesn't it? Yesterday was looking for the market to scooch up and then find sellers, test the overnight low. But essentially, I was expecting yesterday to be a rest day and for it to remain on top of 39.09. We opened at 39.09. The expectation is, after a run-up from the day before, the expectation is that the market is likely to take a breather. It did push the overnight high or the prior day's high overnight, but overall, I did expect it to test the low and go sideways. The secondary scenarios, an early test down into 92, 93, and then a push back into the prior day's point of control at 22 to chop up, to chop around at that point. So completely wrong in terms of what really we got. Here's the 4-tick Renko. There's a lot going on in this image here. This is the 4-tick Renko of yesterday and what has happened. Let me get rid of this developing point of control just to cut down on the noise. Developing point of control. So we opened up around that 3909 MC point of control, basically the most important volume profiling figure in that region. Talked about it a lot, and we opened in what was an open drive, up. And what we did is we tested the prior day's point of control, which was at 22. We tested it and missed by a tick. So the expectation yesterday was a pullback to mid and then a squeeze right through. Remember, open drive, okay? This is a market that had strong bias on the open, on the market on open. So the expectation is that's likely to continue. The point of control having been missed by a tick, the expectation is we'll push through and we're probably going to squeeze into the prior day's high before we rest up. Very, very different than what was expected, and definitely very, very different than what we got. And we immediately pushed up from the mid and then fell right through. This was very odd. Pulls back to the mid at 39.10 against the 39.09, and then squeezes all the way down into the IB low, breaks the IB low, comes back to the mid yet again right here, and then we get a secondary impulse, and then now we have separation between VWAP, mid, and the market. So then it turns into a trend market, really very aggressive. We dropped 100 points from the 39.21 down into the 38.20 in a matter of a couple of hours, really, 3 hours or so. So 2.5 hours, I think. So this was a very focused, determined selling, and the delta down here was going with it. So once we made the low at 20, it looked to me like we are likely to be pushing back to the mid, and we did. I talked about this in yesterday's impromptu for Convergent Trading members. I talked about, hey, and I think at the time we were in here somewhere, I talked about the fact that it was chopping around this 38.50 area, and if it breaks the 38.50, then the longs are going to want to make sure they scale out ahead of the mid. At 70, I talked about during that webinar, I talked about the region, the area, a scale-in area between 69 and 71 being an area to monitor. The expectation, once it tags that area and rolls over, if it rolls over, the expectation is back to 50, but the main driver is 45. So that's pretty good risk reward for that trade, about 25 points, 25 to 27 points for about 7 points of risk. And then if it doesn't hold the 45, then it's likely to move into the 30, chop around the 30, and then if it gives up the 30, then we're looking for the 20 to go. And then, but really what we're looking for is the 0475 to be tested. That was the low from a couple days ago. It pushed to 10. It pushed to 10 Then you have the counter move, the balancing of margins, basically the balancing on the closing range. And where does it settle? It settles right on top of a 3830 MC point of control. So what the market has done is it has migrated from 3909, this MCV POC at the upper end of the range, and I'll show you that on the daily. It has pushed through to 45, which is a minor microcomposite high volume node, to the key 3830, which is the MC point of control down here. And guess where we are currently? We're in the 43 area. We have some pretty decent volatility. We closed right on top of 3830, and we formed our point of control. So there's a lot concentrated here. We put in a point of control from yesterday on top of the 3830. We closed around the 3830, and we've spent most of the evening at 3830. And guess what? The overnight point of control is 3830. This is a price the market really likes right now. So moving into a look at today, and what we've done is we've closed, pushed up on the open, squeezed down, swung to the other side. So higher high, lower low, okay? Lower low again, higher high again, higher low, pushing a high here, and all of it is occurring around this 3830 area. So the point of control in the overnight session currently holding at 3831. So we are completely imbalanced. Currently, we see that the delta is negative in the overnight session, negative 8,000, which is a reasonably decent number for the overnight session. You notice like the overnight session generally is pretty flat. Some decent selling here on the pushes down, weak buying on the pushes up, but overall the 3850 is coming into play. So we are stuck between this high volume node on the composite, which is again 45, and this really clear and prominent high volume node at 30. This is where we're at today. Once we clear this 66, which also represents yesterday's mid, this is the low volume node at 66. Once we clear the 66, 80 comes into play. That's the next high volume node. Okay, 80 comes into play, and then we start moving into the century figure. We have a high volume node at 99. And so the market has a lot to work on to get back up here. And it doesn't change the fact that the market is responded quite fundamentally yesterday. Let's take a look at this chart here. This looks like a crazy profile chart or whatever, but this is a chart that's got the RTY. This is kind of my overview chart. This is the YM. This is CL. This is GC. And this is ZN. Okay, so we got small caps represented. We've got blue chips represented. We've got energies. We've got metals. And we've got treasuries. The only thing that's missing here is Forex, of course. I'm looking at that separately. But look at what's happened with the 10-year futures. They completely fell. They've been skewing down, and they completely fell off the bed yesterday with a clear spike down here. Very clear spike down. Futures go down. What happens to yield? Yield goes up. Yield goes up. Price of money goes up, right? Market doesn't like that. The price of debt is going up. And that's what this chatter is about this morning, that it says in the Reuters Refinitiv release, it says U.S. stock index futures fell tracking global equities as investors were concerned over prospects of higher inflation and interest rates due to rising bond yields. We're looking at the 10-year, not the bonds, but same process. A stronger dollar weighed on gold prices. So we're seeing a drop in gold, a drop in the Treasury futures, which means the dollar is likely to go up, which means it's tougher to sell. It's tougher to sell U.S. products abroad, and the cost of money is rising. We expect the market to inflate given the. Did you know that 24%, something like 24% of the dollars floating around the globe were uh, were pushed out into the money supply just in the last year? 24%. At some point, we would expect inflation normally, but that's a very, very washed out, like a very embattled argument. People have been expecting with the debt, pushing, what is it, 32 trillion or 34 trillion or something like that. They expect inflation to catch up, and they've been consistently wrong. So I'm not a macroeconomist, but all I see here is that despite the balance in the S&P, the volume is quite high, 593,000. There's quite a bit of activity here. It's the overnight session. When I look at the short-term chart, or when I look at my volume scope chart, which is also called a footprint, I see a lot of scalping type action. I see a lot of divergences, a lot of scalping type of setups in the current situation. So what do we got here? Oop, it's this one. Okay, moving on. So what do we expect for today? Oh, hang on. Oof, doing a review without looking at the daily. Tick, or tisk, or whatever it is. So here's what we've done. This is the 3909. I know you're getting worn out by this. 3909, 3830, the 4548. These are your big acceptance areas. These are represented in the profile. They're represented in their respective areas. So these are the big areas to test. 3880 was the low. 78 to 80 was the low that we squeezed into and pushed the other day. That's the low we fell through. We have a higher low, but lower high. We have the weekly one-time framing down very clearly. It's not done yet. The week's not complete yet. But it's looking that way, and we're opening below the midpoint of yesterday's range. Overall, we're looking kind of weak, but we are a fair distance away from the last low. The 3804.75 remains the low of the week and the vulnerable spot here. This was an excess. Why am I saying it's vulnerable? Not just throwing it out there. This was an excess low. Based on the Tuesday trade, this looked like an excess low, and we have fallen below it. We have fallen into it. This 3850 open, the beginning of this wick, we fell through it. And when that happens, generally we test that low. And guess what? We did in the overnight session. We went down to 3801.50 down here. We already took this low out in the overnight session. This is likely to be a choppy open, and you can see Delta continues to trend down on the daily despite the fact that we made new all-time highs and are rolling over. The Delta continuously makes these new lows. Volume is spiking, and the range is pushing higher. Volume is well above the one volatility sigma, so it's unusual volume. We're trading in the territory above one volatility sigma, inside of 2 sigma volatility in terms of volume, or the 2 sigma range in terms of volume. So expecting this to carry over, and I'm expecting this to carry into today with opportunities to set up trades. Again, with more opportunities, there's more risk And so you have to be mindful of that. This is a time to where emotions can run high. What we've done this evening is created this odd kind of channel, and we are just testing the edges of it. The expectation here is it's likely to rotate down to 38.30 for a test early on. So let's take a look at what's expected for today. Setting up that chart. Okay, so here's what we're looking at for today. This morning, we're pushing the overnight high. Again, 601,000 contracts. That is 3 times what we would normally expect in terms of volume. The expectation this morning is responsive selling to bring us back in or towards the 38.30. It might stop ahead of it, not sure. But the expectation is a 38.30, expecting it to battle here before it starts to rotate back up. Push the high, and I'm expecting it to squeeze towards that 62, balance out up here, and then continue to come back towards the 70 yesterday. Last week's close or last week's low was 38.80. This is the area I'm expecting to become a magnet once we clear the 30, the 45. The 80 becomes the next big area, and that's what I'm looking for in terms of what it's likely to do today. Okay. The habit of this product over the last few years is we drop, we consolidate overnight, and we generally take it back. The secondary scenario is a test up that fails to hold, an impulse down. So we're looking for which side the impulse is. Consolidate at 38.30 and then start to squeeze through the 38.30, making its way down into the 38.08 stock zone and consolidation zone. And if it's not able to get back above, then it's likely to move into 3800 and complete this impulse. Remember, we had an impulse pullback continuation, which generated a second impulse. Yesterday's close was highly unusual. It was inside of 2 sigma volatility over the last 20 days. The expectation is in the RTH, we'd expect this low to break, which was a 3810. And if it does, then that sets us up for 3,800 test, and that brings us into the gap zone that we left behind from the beginning of the month. Remember, this is the last day of the month. Today's the last day of the month, okay? Last trading day of the month. There's a factor there. It's not the end of the quarter, but it's the last day of the month. If it starts to squeeze below this 3,800, then we are really geared up to push through and squeeze into the 94, which is the next big area, the 94, 37.94, and it opens the door to 37.50 from here. I'm expecting it to test 3800 and bounce back up. That's scenario 2. We're opening in range of yesterday, so I expect it to be a little more choppy and less directional. Normally, I was completely wrong yesterday. We opened in range. We had a directional trade, but we're opening in range. I'm going to give the market the first, at least past Chicago PMI, which is at 12 minutes after the open. We got Chicago PMI, and it comes out officially 15 minutes out. I'm going to give the market at least 15 minutes to figure out what it wants to do before participating. I know there's a lot that was covered today, but we have movement, and movement creates opportunity for profit and for risk. Good luck, and I'll catch you on Monday morning. Watch your risk, people. Take care.